So we come into this week with the S&P up 4 straight weeks, which is the longest winning streak since we had 5 in a row here from May to June earlier this year. It also was the index's 4th consecutive weekly advance of at least 1%. Now, that last happened from October to November 2021. Last time we had a 5-week run of weekly gains of at least 1% occurred from February to March of 2016. And that started right after a key market low back in February of that year. And as you may recall, it was one of the worst starts to a year ever that the S&P had, which of course then reversed on a dime after that occurred. Last time we had 6 straight 1% weekly advances was from March to April 2009. And yes, that marked the key low after the great financial crisis. So 2 times there where we had a good amount of upside right after. So let's take this a step further. So our friend Ryan Dietrich of Carson Group ran the study, which he put out on X for everyone a few days ago, showing what happened after the S&P allowed a 4-week winning streak that was up at least 10%, with at least 3 or 4 of those weeks of 1% or more. And needless to say, it had a very good track record going forward. Now, there weren't too many of them, right? Because this is a big movement in a short period of time, but within 10 of them, market was up 1 month later, 3 months later, 6 months later, 12 months later, between 70% and 90% of the time. So really, this is just another study that suggests that, short-term bursts of buying can lead to and has led to stronger moves over long term. So what about the short term? Short term, we had the S&P coming out of that overbought condition, right, on a 2-hour chart, 14-period RSI, after being overbought for 8 straight days, right? And that doesn't sound like much, especially from a short-term indicator perspective, but it really takes a lot for that to happen because of just how short-term in nature this is, meaning that you don't need that much variation in price action to push this between extremes, as we can see really what's just happened over the past year here. And so it just tells us, how, number one, how well the S&P has held in there near its highs, right? And so as we know, a very overbought condition can be normalized in one of 2 ways, right? Through price, meaning that things come in very hard, as we saw in the prior 3 months, or through time, where you just have a sideways type consolidation and eventually overbought conditions, start to come in a bit. And so the point is not really get worried about coming out of this overbought condition. It's what you do with it going forward. And again, we point to what happened from March into July, where we had the S&P, of course, up over 4 months, making higher highs and higher lows. That's the most important. But along the way, on a short-term basis, the short-term RSI did oscillate between overbought and just above oversold territory. So do not be surprised to see that start to develop from this really strong period going forward. Now, if momentum does continue to at least pause, we may have a potential MACD sell signal upon us relatively soon. And that's important to remember because recall what happened from 2022 even to the beginning of 2023, where the bear market rallies that failed all were characterized by MACD sell signals happening, right? Pretty substantial, and very clear as well. It even marked the high from July just a few months ago, right? So again, we can't deny the fact that that could happen again. However, this chart alone doesn't really tell us a true picture, right? Because as we can tell, and remember that along the way, there were 4 prior MACD sell signals that did not work out at all, right? Just provided whipsaws along the way. And again, one didn't occur until July. And so anyone who says that this marked the high and this one will as well, you never know what could happen. But remember, this was characterized by strong market action, which really only provided an opportunity to buy prices at, a lower price level, buying the dip, if you will. And really, that's been the case going back a number of years. So this now looks at all the action from the COVID low and all on the way up until the end of 2021. There were a countless amount of MACD sell signals, many of which did not work out, right? And so again, what just tells us that even in the strongest uptrends, momentum is going to slow every so often. That's sometimes characterized by MACD sell signals, but really just tells us that these are just pauses within a longer-term trend, right? We saw it here for a number of months again from March until July. And this will be telling to see what happens after this one occurs, because again, even if the market continues higher, we're going to eventually get a sell signal here just because of how momentum can oscillate back and forth. And so if we're destined to go higher, if all those studies we talked about with longer term implications are going to hold, then a MACD sell signal wouldn't be the best. And as we know, because when do these work the best? In downtrending markets. When do they not work at all? In uptrending markets. So that's what we'll be looking for over the next few weeks. We'll be in touch along the way. Don't forget to check out these videos and subscribe. And I'll talk to you next time. Thank you.